Howdy, everybody. Welcome to Liberty Call. Today is Monday, July 14th, 2025. Hope you're having a fantastical day out there in the interwebs. It was a nice day here. It has gotten cloudy, windy, and thundery. So hopefully it passes quickly. And whatever the weather system is, I've had a headache right here for the last 2 days. It feels like my brain's getting ready to explode. So anyways, all right. Well, Wall Street opened the week cautiously as Trump unleashed fresh 30% tariffs on EU and Mexican imports, stoking trade jitters ahead of key inflation data and earnings season. Bitcoin ripped past 122,000 as crypto fever builds in Washington, while Tesla jumped on news that it may fold XAI's Grok into its EV lineup. With markets near record highs, but nerves are running high, it's shaping up to be a volatile week. So before we break all the news down, need some help from you. Give me some thumbs up, a like, share, subscribe, and follow, and press that notification bell. All right. Well, just some broadcast news. This is going to be the last week of DSA Financial Group's Liberty Call because as of next Monday, I am joining Prudential Advisors, moving my practice over there. So there's going to be some changes, and I have a name of my DBA or doing business as that I plan on using, probably going to be Black Lab Wealth Management, but need to get the finalized from everybody there and do my paperwork and everything to get my DBA set up with the state and all that good stuff. But anyway, so there may be a little bit of a break, maybe a week or so before I get back on track with doing my regular videos. But anyways, so all right, well, let's go ahead and move over and see what's going on in the markets. Let's see. Dow Jones was up 0.2%, 88 points, closed at 44,459. SP 500 up 0.14%, 8 points, closed at 62.68. NASDAQ up 0.27%, 54 points, closed at 2640. The VIX was up 4.88% today. It's at 1720. Canada up 0.65. Brazil down 0.65. And Mexico down 0.41. Headed to Europe. Germany down 0.37. The UK up 0.64. France down 0.27. Netherlands down 0.11. Spain up 0.19. Italy up 0.27. Switzerland down 0.15. And Portugal down 0.25%. Russian exchange is green today. The MOEX up 2.72, our TSI up 2.08. And the Asian markets, the Nikkei in Japan was down 0.28%, Australia down 0.11, New Zealand down 0.48. In China, the Shanghai was up 0.27, Shenzhen Component down 0.11, China A50 up 0.05, DJ Shanghai up 0.13, Hang Seng up 0.26, and the Taiwan weighted when it closed on the 11th was up 0.25%. Good stuff. All righty. Well, let's get to the weekly economic update. Stocks were slightly lower last week while looking past news of fresh U.S. tariffs on nearly 24 countries. The S&P 500 fell 0.31%, while the NASDAQ edged lower by 0.08. The Dow lost 1.02%, and overseas markets slipped 0.43%. The return of tariffs. Stocks started the week lower after the White House posted letters to 14 countries announcing new tariffs set to take effect on August 1st. They include 25% tariffs on South Korea and Japan. Stocks dropped briefly midweek after the White House announced tariffs on 7 additional countries. But as investors digested the news, markets gradually recovered, hoping the administration would dial back its steepest tariff rates again. Markets also rallied on fresh AI trade enthusiasm as the latest Fed meeting minutes, which showed a majority of committee members were open to adjusting interest rates later this year. Markets opened higher on Thursday as investors shrugged off news of the 50% tariff on Brazil imports announced shortly after Wednesday's close. Momentum continued and the S&P 500 and NASDAQ rose to fresh records. Then after Thursday's close, the White House announced that the U.S. was raising tariffs on Canadian imports to 35% and was preparing some other tariffs. Markets opened lower on Friday and trended sideways during the trading session. All right. The T word. While tariffs drove market headlines last week, other T word made news. Trillion. More specifically, 4 trillion in market capitalization. The nation's largest AI chip maker was the first company to breach that market cap level. It crossed over 4 trillion mark intraday on Wednesday and then closed above it for the first time on Thursday's close. So why does it matter when one stock hits such a milestone? For a market cap weighted index like the S&P 500, a company valued at 4 trillion has an outsized effect on overall index performance. The largest 5 companies in the S&P 500 comprise about 1/3 of the benchmark index. That's a pretty big amount. All right. So economic data coming out this week. Tuesday, we have the Consumer Price Index, industrial production, capacity utilization, and we have Boston Fed President Susan Collins and Dallas Fed President Lori Logan speaking. Wednesday, the Producer Price Index and the Fed Beige Book. Thursday, jobless claims, retail sales, import price index, business inventories, and home builder confidence index. Friday is housing starts, building permits, and consumer sentiment. Got a bunch of companies reporting earnings this week. Tuesday is JP Morgan Chase, Wells Fargo, BlackRock, and Citigroup. Wednesday is Johnson & Johnson, Bank of America, Morgan Stanley, Goldman Sachs, the Progressive Corporation, and Prologis. Thursday is Netflix, GE Aerospace, Abbott Labs, PepsiCo, Marsh & McLennan Companies, and Interactive Brokers. Friday is American Express and Charles Schwab. All right. That was it. That's everything for the update. Good stuff there. Let's move into the market recap for today. SP 500 higher as Trump says open to deals on tariffs, easing trade war fears. Yeah, I think Trump is pretty wishy-washy when it comes to things like this. So if he thinks he can get a deal done, he'll be blusterous and everything, while trying to be heavy-handed, and then in the end he caves. All right, the S&P 500 edged higher Monday, buoyed by hopes that President Donald Trump's aggressive tariff moves may still lead to trade negotiations. After sending letters to multiple trading partners, including the European Union and Mexico, outlining new tariffs, Trump clarified that the letters were opening for deals. Quote, "We are always open to talk," end quote, he said, reinforcing investor optimism that a global trade war could be avoided before the August 1st tariff implementation deadline. Despite uncertainty, the U.S. Treasury reported record customs duties collections, $113.3 billion in the first 9 months of fiscal 2025. Treasury Secretary Scott Bessent projected that total tariff revenue could hit $300 billion by year end. So basically, 1/3 of $1 trillion. Not even going to make a dent in the the annual budget or the federal debt. Attention also shifted to corporate earnings with major financials, including JP Morgan Chase, Bank of America, and Wells Fargo, set to report this week. Other high-profile names like Netflix, 3M, and J&J are also on deck. Meanwhile, inflation remains in focus. June's Consumer Price Index report due Tuesday is expected to show a 0.3% monthly increase and 2.6% year over year, possibly influencing Fed rate decisions. Well, if it goes up to 2.6%, I feel pretty confident that the Fed's not going to do anything at the meeting, end of the month on the 29th and 30th. So where was I? While the Fed held rates steady at 4.25 to 4.5 in June, markets now see a slight chance of a July cut, with September easing more likely. I don't see any easing at any of those unless something major happens. Unemployment spikes, consumer spending tanks. Until those things actually occur, I would continue business as usual. Again, be ready to pull the ripcord if things get bumpy. But might as well continue to ride the train as long as we can. Let's see here. In equities, Fastenal stock rose on solid earnings beat, and Kenvue gained following its CEO resignation amid activist pressure. Lastly, crypto-related stocks surged as Bitcoin broke above 123,000, lifting Coinbase, MicroStrategy, and Marathon Digital to new highs. Investor interest in spot Bitcoin ETFs and favorable U.S. regulation are fueling optimism in the sector. All right. Let's dig in a little more to Bitcoin. From Zero Hedge, as Bitcoin tops 123,000, Satoshi Nakamoto becomes the 11th richest person. Bitcoin surged past 123,000, setting a new all-time high and surpassing Amazon to become the fifth largest asset class globally. This rally has been bolstered by steady network activity and strong accumulation trends. Daily transactions rose to 364,000, signaling healthy usage without panic selling, according to analyst Axel Adler Jr. Wallets consistently accumulating Bitcoin now hold 250,000 BTC, up 71% in 30 days, showing renewed long-term confidence. The milestone also propelled Bitcoin's mysterious creator, Satoshi Nakamoto, into the spotlight with an estimated 1.096 million BTC holdings worth over 131 billion. Nakamoto theoretically became the 11th richest person in the world, overtaking Dell CEO Michael Dell. However, Forbes does not include crypto wallet balances in its rankings. Analysts predict Nakamoto could continue climbing the billionaire ranks. Bloomberg's Eric Balchunas believes Nakamoto may reach the second spot by 2026 if Bitcoin grows to its historically 50% annual pace. For Nakamoto to become number one, surpassing Elon Musk's $404 billion net worth, Bitcoin would need to hit 370,000 per coin. Other whales like the Winklevoss twins and Tim Draper hold far less. Corporate holdings total 847,000 BTC. Analysts from 10x Research and Bitwise predict Bitcoin could hit 133 to 200,000 in the near term, while BitMEX co-founder Arthur Hayes sees 250,000 by year end. That is a big number. I don't know if that'll happen, but that's a big number. I mean, part of me, because I do own some coins myself, or not a whole coin, but I'm not going to complain. All right, one last article here. This is the Monday Morning Outlook from First Trust's Brian Westbury. This week's article titled "BBB Mostly More of the Same." Let's see what Brian had to say today. Congress and the president recently passed what many call a, quote, normal, unquote, tax and spending bill, the One Beautiful Bill, the BBB, marking a rare departure from crisis-driven legislation of recent years, like TARP and COVID stimulus packages. While media coverage has sensationalized it as either a disaster or a breakthrough, the truth lies in the middle. The BBB extends many provisions of the 2017 tax cuts, including the current tax rate structure, with the top income tax rate at 37%. And there's people out there who think that's not enough, because you get these whiny people that the rich don't pay their fair share. Hate to break it to them, the rich pay all the taxes. It's the lower income people that don't pay anything. Let's see where, and makes the estate and gift tax exemptions permanent. It also makes permanent some business-friendly provisions like bonus depreciation and the expensing of R&D costs, which could mildly boost investment and productivity. However, it doesn't introduce significant new supply-side incentives. Rather than being a transformative tax overhaul, it mostly prevents a scheduled expiration of existing policies at year end. On the spending side, criticisms of drastic cuts are unfounded. Federal spending in fiscal year 2024 totaled $6.8 trillion. With the BBB, fiscal year 2035 spending is projected at $10.1 trillion, just 2% less than the $10.3 trillion projected without it. In fact, spending as a share of GDP will still be higher in a decade. The bill merely slows spending growth rather than cutting it. The real fiscal debate is still ahead, whether Congress will pass a true budget with substantial discretionary spending reductions. Doing so could reset the federal budget baseline and potentially save $2 to $3 trillion over the next decade. Yeah. You think these fools are going to do anything to slow down spending or actually pay off the debt? I mean, that would actually, give us some financial security for the future and be able to take care of those that we've made promises to, our veterans and our older folks. But hey, let's just continue to run up the credit card, and as long as the bank still gives you money, I guess it's cool. But when it all falls apart, don't say I didn't warn you. All right, well, that is everything that I had to blabber about today. So if anyone needs to get in touch with me, where do you want to go? DSAFinancialGroup.com. All your financial planning needs can be addressed there. So give me a buzz. Glad to help. All right, well, hope everyone out there has a wonderful evening, and I'll talk to everyone again next time. Adios.